we have our business, that's our ministry. That means all of the employees that we have at the business, those are people that we get to be the church to. All of the vendors that we have that we buy product from, we get to be the church to. This is the idea of business as ministry. And I know sometimes our papers get confused where we think like, if God is for us, who can be against us? We're in business, we're going to buy fancy stuff. That's just not it, right? A lot of times people see God through the way that we handle adversity and through the way by the way that we are getting a chance to share Christ with people that don't go to church and don't want to go to church, right? That's business as ministry, is this idea that when you guys leave this program, you might be the only Christians in your workplace. In fact, most of you will probably get to the point where you're going to be the only Christians in your workplace. It's going to be much different from Grace, where you guys are in the middle of this entire group of people that are all spiritual and all seeking God, to the point where you might go out and work in a small business where the only person that knows the gospel is you. And the idea that it's not your job to preach to them, it's not your job to tell them how their living is wrong. It's your job to get excited or get people excited about wanting to learn more about faith because of the way that you portray yourself. Does that make sense to everybody? So this week, I just wanted to put that filler and just put it all back in context, because accounting is rough, right? It's not a fun thing to be doing all the time. This class, nobody comes to me and is like, DeYoung, I just love accounting. This is my favorite. Every single Thursday at 10:30, I can't wait to get in there and start putting credits and debits in the right spot. It's not. That's not what you're up against. What you are doing is learning the language of business, which is really, really important. And I want you all to take some comfort. And if you're just getting by and it all seems a little bit foreign to you, it's okay, right? You're at the absolute beginning of the program and you're learning all these terms, and the software solutions that you guys will end up using in the workplace are not going to look like debits and credits. It's not going to be these long math problems. It's going to be, plug this into QuickBooks, organize these receipts. Here's 100 receipts, file them into the right spots. That's what accounting looks like in the real world. What we're learning here is the universal way to talk the language. So I don't want you guys to get discouraged, and I want you to feel confident that what you're doing, even if you feel like you haven't mastered it, you're at a point in the program where none of you are going to master it yet. This is all part of your learning and development. This is accounting 1. And I just want you to get really comfortable and realizing that the goal of this is to have you learn the language of business and how it all works together. And then we can get to the point where we understand a little bit better. Let's go to Miss, is it Kalia or Kaylee, Miss Stone?
It's Kaylee.
Kaylee. All right. We're not really friends yet, so I'm excited to hear your answer on business as ministry and to get to know you a little bit better. What are you going to write about in your paper?
So I actually already wrote my paper, and business as a mission or like ministry for me is really just, as believers, we have a responsibility to share like the love of Jesus. And I don't think that ministry and business are two separate things, but ministry is a lifestyle. And I think it's like with everything we do. And I also think that like we have a responsibility to help people, like whether it's financially or just like building up society in general. So yeah.
Fantastic. Nice work. Let's go. Hey, Tyler's here. This is amazing. Tyler, how can we make accounting better for everybody?
As long as you with us, accounting is always going to be good.
See, that's the exact answer I was looking for. Thanks for coming in. I'm going to quick change the attendance while I'm thinking about it so you can get credit.
All right. Thank you.
All right. And there's Johan. Johan, I don't know you very well. Tell me a little bit about yourself and tell me what business as a mission is. Oh, I think I'm clicking mute at the same time you are. Johan, nod your head if you can hear me okay.
Oh, can you hear me now?
Yeah, there we go. We're getting good at this.
All right. So I already wrote the paper too, but like I think business as a mission is like just like putting God in your business first before anything else. And so you're glorifying him and like you're trying to spread his word to others. And that's like the main focus of your business. So
That is exactly right. Nicely done, man. It's this idea that you're going out into the world to be pastors and missionaries, but it's going to be as a manager or as a salesperson or as a vendor or as a customer service rep. Um, I know that Miss Brianna works at Fifth Third Bank, right? You get a lot of people that are mad at you when you go to Fifth Third Bank, right? Um,
Yeah.
how many of your coworkers talk about Jesus Christ every single day?
None.
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 How many of them would appreciate it if you walked in and started preaching to them about their sins and about why being a Christian is the perfect way to go about things?
It would not work out too well.
It wouldn't work out that well. It's not because we're wrong, but it's because, especially now in this really divided world that we're in, Christianity means a lot of things that it shouldn't mean anymore, right? What does Christianity mean to somebody that doesn't want to be a Christian? What are the ugly assumptions that we're gonna face when we go out into the world?
Hypocrisy and rules.
We're
Religion.
hypocrites, right? We're hypocrites. We are anti everything, right? We're hypocrites. We're Republicans. We're anti this. We're anti that. We're not kind to people that don't follow our beliefs. Being a Christian is no longer, yes, this person's a Christian, I can't wait to work with them. It's like, oh no, Brianna's here, everybody stop swearing, right?
Right.
Which is an awesome ministry for us to go into.
Mm-hmm.
But it's challenging, and it doesn't look anything like the preparation that you'll go through when you're going to go into the pulpit on Sunday morning and you preach to a whole bunch of people that believe what you do. Your job at Fifth Third Bank is to stay positive, stay kind, and genuinely try to get to know your friends. Usually not mentioning your faith until somebody asks you. That's an interesting way to think about business's mission too. I used to run paint stores. That was my job. I used to work at Sherwin-Williams, and I'd have 300 customers and 6 employees that all answered to me. And I was not living out my faith at that point in my life. I was much more troublesome. And then when God called me out and said, I want you to go to Africa and be a missionary, I changed. I changed internally. And I grew up going to Christian school and knowing how to say all the verses and do all the right things. But to be honest, I never really thought, oh, I can't wait to share Jesus Christ with these people, and I really want these people to get saved. That was never part of my life. Until I had to go to my job, and I gave them a year notice and said, my wife and I decided we're going to move to Africa to be missionaries. And instead of people saying, oh, I want to learn more about this, I stopped getting invited to the bar on Fridays. Because they were like, I used to go to the bar on Fridays with my coworkers after work. That was what everybody did. And they were like, we're scared to go to the bar with you now because, like, are you going to judge us? And I'm like, well, no, that's not what this means. It's not what faith means. It's not a rule book. It's not this. I genuinely just want to get to know you. And I'm not here to make sure that you know that you're sinners. I'm here to be somebody that's filled with the Holy Spirit. So if you fall on hard times, you have somebody that you can talk to about it. And what happened to me, I gave a year-long notice for my job. I said, I'm going to move to Tanzania in 1 year. I'm going to finish strong. I'm going to do my work. I'm going to make sure that I train somebody else up to do my job. And then I'm going to leave. And at first it was really weird. People didn't know what to do with me. Then it started to happen where people said, I didn't really know you had faith. And I stopped in my tracks and went like, oh my goodness, if my only job in this world is to glorify God, and these people I've been working with for the last 7 years didn't know I was a man of faith, I didn't do any of the work that I was supposed to do, right? I didn't represent Christ, which is supposed to be the only reason we're on this earth. So I started to not get bold with it. And this is where I think I've got to train you guys in a different way, where I don't want you to walk around with your Bible under your arm throughout Fifth Third Bank. And then if you catch somebody swearing, slip them a little Bible verse on a sheet of paper that says, I don't appreciate this. Here's how you should live. I think it's loving people exactly where they're at, but not compromising the way that you interact with them. But honestly, like, I would rather have a whole bunch of Christians going to the bar on Friday with their friends and getting to know them on a personal level than I would saying, you know what, I don't believe in the bar. You're not allowed to go. I don't think you should go there. I'd rather have you in the mix with people, loving them where they're at, and being an approachable type of Christian. Nod your head if you guys are with me. Because culture is going to play a big part in this too, right? The culture at Fifth Third Bank is most likely a corporate culture where you're trying to get promotions, right? And people are usually really kind to the people that are in charge of them, almost to the point where they're I don't know if you can say I was going to say kissing butt, but I don't think I'm allowed to say that. But you know, like you have this corporate entity where you're in charge of being really nice to your supervisor so you can get a fancy job later on down the road. That's part of that culture. Who else has a job where they're working consistently right now? Kellum, where are you working? So. Tell me about this, Kellum.
I'm working with Jerome Cobb at that paint place.
Oh, you are?
Yeah.
Rome is shaking his head no. I worked there. I worked there too. I hated it. Are you
I like it.
You like it?
Yeah, it's pretty easy.
Okay, that's an interesting one because have you gone out on job sites yet?
No.
All right. Cobb, have you been out on job sites yet?
Nope, he hasn't either. All we do is we're just in the shop. We just chill and talk in the shop the whole time, to be honest. Get work done.
So you're in a place where you are still in a place where the leadership and the ownership of that company is pretty faith-based and you're not in a really unruly, nasty spot. This summer, if you guys stick around and you're painting big industrial complexes, there is no similarity between that and church. Those dudes are rough. It's constant cursing, constant swearing, constant talking poorly about all kinds of things.
100%.
Is it your job to say, hey, you guys shouldn't talk like that? Or is it your job to be fun and entertaining and kind without talking like that?
The second one, you know, I just kind of go with the flow. Like they say what they want to say. I just listen, you know. But you know, I stick to my words. I don't get to talking crazy. Most of the time, they don't really talk crazy, like, you know, but they let a couple words slip sometimes. But whatever.
My job when I was doing the paint company, I was in charge of filling up the airlesses and changing the buckets. And then when they were moving the lift around, painting all the high stuff, I was in charge of like sweeping up after them. And man, they called me every name in the book. And it was a rough spot. And if I understood business as ministry better, I would have handled myself differently, right? Because I was a young man and I just wanted to be accepted, I was much more willing to just jump in and use the same language and jokes as everybody else. Mm-hmm. That's an easier way out, but it's not the way out that I think we all know we're supposed to have.
All right.
Huh. Cobb, how's your job going so far?
You said Cobb?
Yep. Mr. Cobb, what's it like to work?
You hear me?
Yes.
I said,
what you say, Romy Rom?
The job so far. We've been doing some paint and learning how to mix paint and cleaning out bugs. I'm having connection issues. Hold on.
I'm just going to mute you out of love. Don't worry about it. If you guys have a really bad connection, I'm going to mute you. It's not because I'm mad at you or anything. It's just because it's distracting for everybody else. Whenever we're in our job, whatever it is, I just want you to think about those people that God chose to surround you with, right? Think about your workplace as people that God chose to surround you with. And I think that will change everything about it. Those bank tellers that are constantly chasing or talking mean or gossiping or whatever that might be. I don't know your scenario. Instead of thinking them as like, oh, these are my employees, think about why did God surround me with this group of 10 people? And if you go home and just consistently pray for them and ask God for opportunities to be a light to them, think about how different your job would feel to you. And that'll go for all of you, right? Instead of going into business's mission and saying, you know what, I really want to save all of these people. Instead of saying that, which is hopefully your goal for everybody you come across, the more passionate you get about following the Holy Spirit, the more I want you to go back home, put all their names on your prayer list, and just go and intercede for them. Go and pray and ask God for things. And in the workplace, it's a little bit weirder if you walk up to an unbeliever and say, how can I pray for you today? Right? It can create a little bit of an uncomfortable spot. But it's one of the most critical components of doing business as ministry, right? That vendor that comes into the shop from the O'Leary Paint or from Sherwin-Williams to come deliver all that product. What if that delivery driver just knew that Kellum and Rome, they were good guys that really cared about them. They knew his name. They asked him questions about his life. When they showed up, you grabbed them a cup of coffee and said, here you go, man. Would you like this? It changes the way that you interact with people based on your goal of one day letting them know the hope that you have. So that's our Business's Mission Minute. I hope that idea continues to cement in your minds, because that's really what I want to do at the school. Is I want you all to be able to go out into the workplace knowing that God put you in your job, wherever that might be, and he wants you to impact the world for him. But it's not usually hard-hitting gospel or condemnation. That's what we're already known for. And I think a lot of us have a job to kind of break that cycle, to be better at sharing Christ with people in an authentic and genuine way. All right. Who wants to get into the inventory PowerPoint? I can't hear. Who wants? All right. I don't either, but you know what? It's accounting and I get paid to teach this, so I'm going to do it. So when I share my screen, you guys should be able to see everything that I'm looking at pretty easily. There's our attendance sheet. I did share these PowerPoints with you guys if you wanted to print them out before lecture. I will not go through and read PowerPoints. When that happened to me when I was in school, that made me so mad that the professor did that. But there's a few key concepts that you have to understand, and this will help us stay consistent with what we're doing. So nod your head if you were able to just open up those PowerPoints from inside of the announcements in Blackboard. All right, good deal. So here's what we're talking about today. Chapter 5, we introduced something brand new. We introduced actually buying our merchandise first, which makes accounting much, much differently. Chapters 1 through 4, you were either a service firm or you were a consulting firm. You never had inventory to keep track of, and you never had a cost of goods sold. What's the best way to think about that? If I've got my coffee cup here, right? Somebody buys these Yeti coffee cups and then resells them. Is the price always the same every single time I buy a load of those things, or is it always different depending on price of gas, price of materials, time of year, super sales? The price always changes, right? Chapter 6 is all about how do we account for those price changes so that our books accurately reflect our business, right? Because no matter what we sell, if we don't make it ourselves, the price of that inventory changes. Nod your heads if you're with me. Yeah, we're having fun now. Tyler, 100 points for that extra solid head nod. I'm proud of you, man. So we have to think about, in accounting, our job is to print reports so that people can understand our business without visiting it. That's what it is, right? The accountant's job is to be able to accurately reflect the business in every single way so that somebody that's never been to our business can read our balance sheet, read our income statement, and get a pretty good feel for how much money we have, how much inventory we have, and the direction that we're going. That's what an accountant does. They prepare those so that other people can read them and understand the business. So in chapter 6, it's all about inventory. It's all about how do we keep track of our inventory in a way that we can absolutely reflect how much we have, how much it costs us, and how much money we make when we sell a product. So if we go back to, I wish I had something cooler than a coffee cup, right? And I don't know how much this sells for in the States, but a Yeti coffee cup, let's call it 20 bucks, right? If my coffee cup costs 20 bucks and I sell it for 10, or I'm sorry, and I sell it for 30. So I buy this for 20 from a manufacturer of coffee cups and I sell it for 30. What was my cost of goods sold? It's $20, right? My cost of goods sold is $20 because that's what I bought it for. My profit is what? Bought it for 20, sell it for 30. What's my profit?
$10.
100%. Kellum, I'm giving you the points. I'm not sure if that was you or not, but I'm giving them to you. $10 profit.
That was me.
See?
Wait.
That was not
Kyle. That was
Kellum.
Kyle, baby.
Yeah.
That was
I'm going to have to scroll down. All I can see is Kellum and Tyler, and it's really throwing off my lecture.
Oh man, that sucks.
Yeah, your time.
All right, when I answer, I'm gonna shout my name when I.
Yeah, there we go. If you want the bonus points. Now I'm looking at Malachi, Johan, and Kennedy, but she's babysitting, and I respect that because she's working her way through university, so I'll never yell at her for that. And I'm going to post these videos online so that you guys can go back and read or see what I did if you have to miss the class for anything. All right, so we are accurately reflecting it. That means part of our merchandise inventory, right? This is the category that we got introduced to last week. Merchandise inventory is basically anything that we have that we can sell. This week we talk about goods that are out on the truck to get delivered are part of our merchandise inventory. Goods on consignment. Anybody know what consignment means? Consignment is when I go to a store and I say, will you sell these for me? You don't have to buy them. Can I put them in your store and then you sell them and then you give me the money? But it's basically me just trusting you to put these in your store and then sell them later. Nod your head if you're with me on consignment. So consignment shop is somebody makes little wooden handcrafted statues. They bring them to the gift shop. Whenever the gift shop sells one, that's when you make your money. Until then, your inventory just lives in another store. The other thing that we have to pay attention to really carefully is anything that's damaged, right? Damaged or goods that can't be sold anymore. In the paint store, when I used to work at the paint store, we'd have gallons of paint that were past their expiration date. My inventory has to reflect that those are no longer valuable to my business, and I can't count them on the balance sheet anymore. Nod your head if you're with me. Something that's obsolete, something that is no longer saleable, our accounting books have to reflect that we have something in the warehouse that doesn't have any value anymore. Now we're having fun, right? Jameson, are you loving this? Yeah, good head nod. Miss Kaylee, how are we doing so far? All right. So let's get into the next slide here. So we have two ways that we can look at this. And this is important too when we think about sending stuff out via delivery. There's two ways to look at it. One is freight on board, FOB, shipping point. That means that these are in my inventory until they reach the destination. That means if the truck starts on fire or blows up on the road, who's in charge of that inventory, me or the customer? Well, if it's from the shipping point, it means once it leaves my warehouse, the buyer is responsible for it. The destination means until it gets to their warehouse, they're responsible for it. It's an interesting thing to think about when you're thinking about your contracts, and something that just has to be accurately reflected in your books. So if your FOB, if your freight on board is included in the shipping point, it means once it leaves the shipping point, it's the customer's responsibility and it goes into the buyer's inventory. If it is the destination, not until it hits the warehouse at the final destination, that is when it belongs to the person that purchased it. Johan, nod your head if you're with me. Yes, we're killing it. All right, so goods in transit, accounting period, goods on consignment. I talked about this already. This is you bringing your goods to somebody else and saying, please sell these for me. Once they sell it, then you get your money. Skipping along nicely to figure out what our inventory costs are. So not only is it the stuff that's in our warehouse shelves, we have other costs, which is the cost of shipping the material, which is part of your inventory cost. The price of insurance and import duties and storage, those are all things that have to also reflect in your inventory costs. Make sense? All right. So these are the 3 ways that we can measure inventory. FIFO, LIFO, and WAC, weighted average cost. There's also specific identification. Specific identification, if you could see me highlight that. This is not for somebody that buys a whole bunch of something. This is for a store, let's call it artwork, right? Artwork would be something where the cost is not going to be the same at all. You buy a piece of art, it's not mass produced. You buy a piece of art, and for that moment, every time you sell it, it has a specific identification for its cost, right? It's specific things that their cost is going to be unique to everything else in the warehouse. Here is where we get into the most used one. This is called first in, first out. In accounting lectures all over the world, they call this FIFO. This means if we're selling coffee cups and I buy 1,000 of them that all cost $20, I have a little pile in my warehouse, right? Think about these all as piles in your warehouse. I've got a pile of coffee cups, 1,000 of them, they all cost me $20. That means when somebody goes to buy a coffee cup, the first ones in my warehouse are the first ones that get sold. Nod your head if you're with me. The first ones in your warehouse are the first ones that you sell when you sell to a customer. Last in, first out means that you might have 3 piles of coffee cups in your warehouse. You're constantly selling the most recent ones that came into your inventory. This is called last in, first out. It's less common than the first in, first out, but it is another inventory method that you'll use to compute these equations. So the last one, first out, means if I bought one load of 1,000 coffee cups at $20 a piece, and then a month later, I buy a load of coffee cups that I got a good deal on, and I buy them for $18 a piece. When somebody comes to make a sale, I'm going to the $18 a piece coffee cups instead of the $20 a piece coffee cups. Nod your head if you're with me. Yeah, good deal. So this is important because this is how we tell other people how much inventory we have in stock, right? That's the whole reason that we do this, so we can tell people, here's how much inventory we have in stock. Here's what our business is worth based on that inventory. And then weighted average cost. Weighted average cost means everything that comes in, we count it up and we figure out the same cost for everything. That means if I've got a load of $20 coffee cups and a load of $18 coffee cups, I add them all together and we get let's say we both have 1,000 of them, my weighted average cost is gonna be what? It's gonna be $19 per coffee cup. That means I'm just taking the average cost of the ones that cost me $20 and the one that cost me $18. So far, so good? Who can I call on? Malachi, Merrill, does this make sense to you? Yes? Yep. Good deal. Amani, are you happy? So far,
can you explain the first in, first out and the last in, first out thing again?
Yes, Kellum, I'm so proud of questions in accounting class. It makes me happy. So we have, and next week I'll buy a little marker so I can use this board again. It's been a while since I taught like this. First in, first out means we're going to go to coffee cups because that's all I have. Maybe a pen. Here you go. Mm-hmm. Pen costs $1, right? I sell it for $2, but I buy this from China for $1, right? So I go buy 1,000 of these things for $1. I put them in my warehouse. I've got a little section that says these pens cost me $1. Somebody comes and wants to buy 1,000 pens from me. I take that from whatever inventory I first purchased. So if I purchased a load of inventory in January and another load of inventory in March, if I'm doing first in, first out, I'm selling everything that I purchased in January before I ever touch the ones that I bought in March. Does that make sense?
Oh, okay. I guess. Yeah, I get you.
Right. So then
Uh,
at the same token, if it's last in, first out, it means I've got two piles. I've got pens that cost me $1 and I've got pens that cost me $1.50 because the price of pens skyrocketed. If I bought the ones in January at $1 and the ones in February for $1.50, if I'm doing last in, first out, it means I'm selling out of that pile that I spent $1.50 on instead of $1.
Okay. Uh-huh.
Good question.
Gotcha.
Bonus points for good questions.
I have a question.
Yes. What do you got, dear?
Okay, do you know if there's any like exception to the last one that said wait.
The weighted
It
average
said
cost?
the last in, first out. Like, what if the last stuff you bought is like really expensive and the old stuff are still there, but they're about the same, but they are cheaper? Like, do you know?
And part of you wants to sell those. The reason that you can't do that is because the IRS actually makes it. If you decide to do last in, first out, the IRS makes sure that you never ever change from first in to first out because you can manipulate your numbers and then your numbers won't be true anymore. So even if it makes more sense and you could make more money, if your choice is last in, first out, you have to stick with it. And it means that you have to keep the cheaper stuff in inventory until you sell all the other stuff.
But what are the old stuff gonna do in the company if they don't sell it?
Eventually you will sell it, right? If you have a business that sells inventory, eventually you will sell it or you'll go out of business. Those are really your only two options. If I've got 1,000 pens in my warehouse and I can't sell pens, my only option is go out of business.
Okay, makes sense.
Good question. All right, so let me see if I can get this bigger. Can you guys see this slide okay on your screens? Yeah? Okay, good deal. So here's our boxes of pens, right? We bought our first box of pens for $70. We bought our last box of pens for $70 on May 6th. We bought our first box of pens for $45 on May 1, right? First in, first out means we are always selling the stuff that we purchased on May 1 first. Nod your head if you're with me. These were the first ones to hit our warehouse. They're going to be the first ones that leave. If we look at this, so in the textbook, they're going to say a customer comes in to purchase pens. They want to buy $100 worth of pens. You go back and grab this box of pens for $100, and your inventory or your cost of goods sold is $45. That's how much it costs for you to bring those into your warehouse, is $45. That means you have a profit, a gross profit of $55. So far, so good? So cost of goods sold is how much it cost us to get a product into our warehouse. Gross profit is how much money is left over after we sell it. So far, so good? All right. With the last in, first out method, you can see that the price of these are the same, but our numbers and the money that we made are going to be completely different based on the inventory method. So somebody comes in and says, I want to buy one of those $100 boxes of pens. Even though you'd love to sell them the one that you bought for $45, you're going to sell them the box that you bought for $70. That means instead of making $55, you're going to be making $30. Nod your head if you're with me. All right, not so bad. The last one that we look into is weighted average cost. Weighted average cost means we have all three of these in our inventory. We've got the $70 box, the $65 box, and the $45 box. In order for us to figure out how much inventory we have, instead of saying taking this box in isolation, we add up all of our boxes and divide it by 3 to get a number that is consistent across all of them. You with me? So here, our cost of goods sold is $60, and it's $60 for each one of those boxes, no matter what. This, in most big corporations and most big businesses, the weighted average cost is much more commonplace because you have inventory management systems to do all this work for you. You with me? All right, let me call on somebody just to keep you awake. Joseph, come on. Are you with me?
Yeah, mostly.
Awesome. And this is all brand new, and this is meant, so this assignment in chapter 6 is going to be due Thursday after we talk about this again on Thursday. So I'm introducing it to you. I'm starting to get your feet wet with the topic. And then next week, Thursday, you'll have more focused questions on the assignment that you were working on all week. And I'll be able to just pull up the assignment right on this screen and go through it with you and make sure you all get the right answer. All right. So then inventory on our balance sheet, this is the other thing that will change. Remember, our balance sheet is just a list of our assets, our liability, and our equity. That's what the balance sheet is. The balance sheet is a snapshot in time where you say, here is exactly what my business has, here's what it owes, and here's what it's worth. That's the focus of the balance sheet. Here, because we just sold our first in, first out, we've got these two boxes that are left in inventory. That's $135 worth of goods in inventory. Here's where it shows up on our inventory balance sheet. If we have the last in, first out method and we had to sell the $70 box first, the cost of our inventory, or what we display as inventory, goes down a little bit, right? Because we've got these two less expensive boxes of the same goods that's in our warehouse. And here our inventory is much more consistent because we're taking the weighted average cost, is we're adding up everything in our warehouse and dividing it by the number of pieces to get our cost of inventory. Moving on to the next slide. So when we think about what merchandise we have in our system, you think about the time period of the accounting, right? That is going to be something that's valuable. Is if we stop and say, okay, it's October 24th, let's run our balance sheet. On October 24th, we have to figure out how much merchandise we have available to sell. That means we have to take, what did we have in our beginning inventory? I'll quick go back to this slide. Here's our beginning inventory, right? This box is our inventory. What do we have in our beginning inventory? And then what inventory did we buy? That's what net purchases means. What inventory did we buy from the vendor? That is going to equal how much merchandise we have available to sell. When we want to figure out how much money we made, we say how much inventory is left and how much of it went into cost of goods sold. Right? Cost of goods sold is just figuring out when I go and sell that box of pens, how much was my cost of goods sold to pull them out of the warehouse and sell them. So there's two different ways to look at this. There's a perpetual inventory system, and then there's a periodic inventory system. I've done I've tried to take out everything in the periodic inventory system because I don't necessarily need you guys to learn that. It's not going to be important moving forward. So almost everything you do is going to be in the perpetual system. All right, so you're going to see a lot of assignments that work like this. So if you're falling asleep, wake yourself up and look at this slide because this is going to be a lot of what it's going to take to tackle this assignment. So here is the mountain bike inventory for a business. So they sell mountain bikes. When we look at units acquired at cost, I want you to think about mountain bikes. When they go into their warehouse on August 1st and they look at their inventory, how many bikes do they have? Big bonus points on the line for somebody who unmutes and tells me how many units, as I circle the answer with my cursor.
10.
They got 10. How much did they buy those for? They got 10 bikes. And how much did they buy those from the Mountain Bike Corporation? They bought them for $91 a piece. I'm giving Kellen the points.
Yeah.
All right. So inside the warehouse, you've got 10 bikes. They were purchased at $91 a piece. And there's 10 of them in the inventory. Now, you're looking at your warehouse going, man, if people want to come in and buy lots of bikes, I don't have enough. So you're going to go buy more mountain bikes. You're going to buy 15 more. What happened to the price on the next 15 that you bought?
Goes up.
The price went up. It went up $1 or went up to $106 per mountain bike, right? Now you've got 25 bikes in inventory, but they've got different prices. This is where your inventory method is really, really important to understand how you're going to allocate those costs correctly. So most of these assignments that you guys are going to run into are going to say, compute this based on first in, first out, last in, first out, and weighted average cost. It's going to ask you to make all of those changes so that you can do all the calculations. So you'll do these assignments, and a lot of times you're doing them 3 times in a row. So now we make a sale, right? Somebody came in and they bought 20 bikes. Yes, they bought 20 bikes and we sold them for $130 a piece. Now we have 5 bikes left in our inventory, and the way that we cost those is going to change. If we're first in, first out, these 10 bikes are the first ones to leave the inventory pile. That means when we have 5 left, we've got 5 left that all cost $106. Nod your head if you're with me. That's first in, first out. If we're last in, first out, we have got 5 bikes left in inventory, and those 5 bikes left in inventory, they're $91 per bike. You with me? So it all depends on what type of inventory unit that you use. So now that we have those, we go and we buy more bikes. So on August 17th, we've only got 5 bikes left in our warehouse. We go and we buy 20 more bikes. What happens to our cost?
It went up.
Goes up again. Now we've got 25 bikes in our warehouse, and they have 2 different prices depending on our inventory method. We go and buy more bikes. What happens? The price goes up again. But look what happens here. We go out and we sell 23 bikes, and instead of selling them at $130 a piece, we sell them at $150 a piece. Now let's do some calculations and make this really, really fun. So if these are ultra fancy mountain bikes that have a specific identification, it means we bought all of the blue ones for $91. We bought all the red ones for $106. Blue and red, I just made those up off the top of my head. If you're looking for that, it's just me using an example. Specific identification means we're going to sell a specific kind of bike and use that as the number. So when we made our sale on October 14th, we made a sale of bikes. We can use the specific inventory method to say we sold 8 of them at $91 and we sold 12 of them at $106. Here's our calculations of the ones we sold as a specific method. Go back to the last slide. That means instead of us averaging everything out, we're saying we sold these specifically at $91. We sold these specifically at $106. You won't run into too many problems with this, with the specific identification. But if you do, it's simple. You just take the exact amount you bought them for. You don't take them out of any piles. You sell exactly what you bought them for, and you do those numbers. Here's the first in, first out. Whatever is the oldest one in our inventory, that's what we sell for. And whatever is the most recent to hit our warehouse, that's what's going to be left in our ending inventory. So if we go and do this same problem, and now you look at us, we are first in, first out. This is what we're looking at. We went into our warehouse on August 1st. We saw we had 10 bikes. They cost us $91 per bike. We said we need to buy more bikes, so we have more bikes to sell. We went and bought 15 more of them, and they are $106 a piece. Now I have 25 bikes in my inventory, but I've got 10 of them that I bought for $91, and I have 15 of them that I bought for $106. That means I still have $2,500 in inventory, but when somebody makes a sale, which pile am I going to grab from first? Amani, when I go and make a sale, what pile am I going to go grab from first? The ones that were the first ones in. How much did the first ones in cost me?
They cost you $91.
That's why you're my favorite student in the whole school. Always get the right answers.
Hey, bro, watch out.
All right, so you go and you buy you go and grab the first bikes out of inventory. So when we get this order for 20 bikes, we grab the first 10 out of that pile, And then we have 10 of them that cost us $91. And we've got 10 of them that cost us $106. The ones that are left in our inventory, there's 5 of them, and they're from our oldest pile of inventory. That means there's 5 of them that are all worth $106. Nod your head if you're with me. I'm going to stop and open it up for questions because I know this is all brand new and a little bit strange.
I didn't quite understand that last part. Can you repeat that and explain that a little bit better?
I sure can. So we have a sale that is coming up, right? So August 1st, we look at our warehouse. We see 10 bikes there. Each one of those bikes we bought from the manufacturer of bikes for $91. Later on, the manufacturer of bikes sells us more, but the price of metal went up, the price of rubber went up. Whatever that reason it went up, the price went up, and now bikes are not $91. Bikes cost us $106. Somebody comes and says, I need to buy 20 bikes. We go into the back of the warehouse, we see 25 bikes. But we realize that because our inventory method is first in, first out, we go grab the bikes that have been there the longest and we sell those first. That means we sell 10 bikes for $91 a piece and we fill half that order. Then we fill the other half of the order with the most recent bikes. That's $106 per bike. So we just made a sale on bikes, and our inventory that we sold, our cost of goods sold, was $1,970. And the only thing we have left in our warehouse are 5 bikes that we paid $106 for. So far, so good? All right. Now, we've only got 5 bikes in our warehouse. What's the next thing we have to do? We got to buy more bikes to sell, right? You can't run a bike shop if you only got 5 more bikes in inventory. So we go out and we buy 20 more bikes. How much did these 20 new bikes cost us? They cost us $115 a piece. So now our inventory.
115.
Oh yeah, did I say? I might have said something different. $115 per. So now when we walk in our warehouse, I've got a pile of 5 bikes left that cost $106. And I've got a pile of 20 bikes that each cost me $115. That means I've got $2,800 worth of bikes in my warehouse, but they're different, right? 5 of them cost me $106 and 20 of them cost me $115. And then I feel like, you know what, I've got a big sale coming. I'm going to go out and buy more bikes. Now I need another pile. Now I have 3 piles of inventory of bikes. I've got 5 bikes that cost me $106. I've got 20 bikes that cost me $115. And I have 10 bikes that cost me $119. So now I've got $4,000 worth of bikes in my inventory, and each one of these piles has a different cost. Now we need a sale. August 30th, somebody comes and they say, I want to buy 23 bikes. We're happy. So we have the warehouse guys go and grab bikes. And because we are first in, first out, we go and grab first from the pile that's been there the longest. That means the first pile, we grab and we sell them 5 bikes that have a cost to us at $106. And then we buy the last 18 bikes from our second oldest pile. That means what's left in there? Well, we've only got 2 bikes left that cost us $115. And we still have those 10 bikes that we bought for $119 on August 28th. Make sense? Kennedy Davis, how are we doing so far?
Am I unmuted?
Yep, you're on now, dear. How are we doing?
Pretty good. I like how, like, the stuff that you've needed to explain twice, I've also needed.
Okay.
And I'm trying to, like, balance everything else kind of crazy. But, yeah, no, I like the PowerPoint. My mine works better with visuals, so I'm enjoying this.
Good deal. So then what I'll do from now on, just so we can all know exactly what to expect, is every week I will lay out the new chapter by doing the PowerPoint. And then before you turn everything in, so next Thursday, I'll spend some of our time going through the new concepts that are going to be in Chapter 7. And I'll spend some of our time going through actual problems from your homework for Chapter 6, so that you guys will have a chance to pull up your assignment and we can work right along with the assignment so we can make sure that we answer your specific questions. All right. So first in, first out, I think we all get it. It always has helped me to think about it as a warehouse where you go and buy and grab from piles of inventory. That's always helped my mind understand it. If that doesn't help you guys understand it, you don't have to. You can just follow along with what's on the paper. All right, so now we're getting into the last in, first out. This means whatever we bought and brought into the warehouse most recently, that's what we sell to our customers when they come in for an order. And the old stuff stays in there. I think about wine when I think about this. Actually wine, because I'm trying to think of something that would age well that you'd want the old stuff in your warehouse. The only thing I can really think about is wine. What else would age well that you'd want the older stuff in your inventory? Maybe like comic books that are more valuable as they get old?
I was just going to say antiques or something.
Antiques. Good job, Mr. Hill. 100 points for you. So these are things that you want the older stuff sitting in your warehouse, and you're going to sell the new stuff first. So let's go back to the world of our bike warehouse. Last in, first out means August 1st, we're walking around our warehouse hanging out. We see 10 bikes. They cost $91. And for those of us who love accounting, we smile at those bikes and say, I don't know if you're ever getting out of here because I'm going to buy more bikes. Then we go out, and on August 3rd, we say, we only got 10 bikes. We need to buy more. We're buying 15 bikes at $106. But now, because we're last in, first out, we know that when we sell bikes, we're going to sell these first. The last ones in the warehouse are the first ones that get sold out of the warehouse. So if somebody comes in, they said, I want to buy 20 bikes. We sell all of the bikes that were $106 first. And then we go to this pile and we grab the last 5 of them. So what's left in our inventory is 5 bikes that are $91 a piece. And then we have to go buy more bikes. We buy 20 more. This time they cost $115. And we know we're going to sell those before we sell the $91 ones. Doesn't make a lot of sense to do this for bikes, but this is accounting, and we have to learn the methodology of last in, first out. Then we buy 10 more at $119, and we get our first order for 23 more bikes. Now, instead of selling the $91 bikes, which would help us make more money on the sale, because we're last in, first out, we first grab from this pile of $119 bikes, and then we grab from this pile of $115 bikes, which means we sell 10 of them that have a cost of goods sold of $119, and we sell 13 of them that have a cost of goods sold of $115. That means what's left in our warehouse? We've still got those 5 that were with us at the beginning, 5 for $91 and 7 for $115, because we sell the last ones in the warehouse were the first ones out. Nod your head if you're with me. I think we're winning. I think we're doing it, you guys. All right, and now we go to weighted average cost. This is, if I was running a business, this is the one that I would use because it makes the most sense to me, and it's the most comfortable for making sure that you always know how much money you make when you sell a bike. Because think about the difference here. I'm going to go back into this last in, first out. Our cost of goods sold when we use last in, first out, look at here. That last sale on August 30th, those goods were $2,685. When we did first in, first out, it was $2,600, which means we made more money with the first in, first out than we did in the last in, first out. Why is that important? Because our books have to reflect exactly what's left in our business. That's the only reason why it's important. So now we get into weighted average cost. And here is where we have to do some math. And it's not hard math, but you have to do it. So in your mind, the minute you see weighted average cost, you know you have to figure out the singular price for everything in your inventory. Right? Now you don't have piles of inventory. Now you have one price that's going to be this big pile where all of them have the same amount. So weighted average cost. We go into our warehouse, same thing, August 1st. We've got 91 bikes. We go in and buy more at 106. Now, instead of having piles of inventory, we have to do some math. And we have to figure out, now that we have 25 bikes in our inventory, how much does each one of them cost? How much does each one of them cost. So you have to add up everything in your inventory. That means 10 times 91, 15 times 106. You have to do that math in order to figure out that now you have an inventory balance of $2,500 worth of bikes. Then you take $2,500 and you divide that by your total number of units, which is 25 units. And that is where you get this average cost of $100 per bike. We're going to do this again because I know that not everybody got this just because I've been teaching this for a while. Logan, how are we doing so far? Good? All right, I see the nod. All right, so when it's weighted average cost, we have these bikes in inventory. Right now, the cost of our inventory is $91 per unit. We go to the buyer and we make an order, our price goes up, and now we've got 25 bikes at 2 different costs. We have to make our cost consistent. So we multiply 10 times 91, we get 910. Then we multiply 15 times 106, and I can pull up my calculator just so you guys can follow along. Maybe. All right, so I can't figure out how to do my calculator with all the Zoom stuff that's on there. So I'll show you on my phone calculator. And because I can't do my math in my head, 15 times 106 equals 1590. 1590 plus 910 equals 2500. You see how I got that? You will have to do this kind of equation every single time you run into weighted average cost. Multiply how much do I have by how much it costs, and then how much do I have by how much it costs, add that number together, and then divide it by the total amount of units in your inventory. So here we've got $2,500 worth of inventory. That's 25 bikes. That means we have $100 per bike as our number. Somebody want to stop me there and have me do it again, or are we good?
Yeah, do it again.
Do it again? All right. So maybe we can do it this way. Look at me figuring everything out like a real professor. All right, here's our calculator. When we look at this problem, we go into our inventory. Weighted average cost means we've got 10 bikes that cost us $91. So if we're just doing weighted average cost on there, we've got 10 times 91 equals $910. Divided by the total amount in our warehouse, divided by 10, that means our weighted average cost when we're just on August 1st is $991 per unit, $910 worth of inventory. Now it's August 3rd and we're buying more. Now we have 15 bikes at 106. So we multiply 15 bikes times $106. That equals $1,590 worth of inventory purchased. Now we have to add together what was already in our inventory, plus $910. Now we've got $2,500 worth of bikes in our inventory and 25 bikes. Divide that by 25. That gives us our number, $100 per bike. So we come into this new screen. Ooh, the rain is really falling in Belize, so I'm going to try to chat loud, but I hope it doesn't throw you guys off at all. Now we make a sale. When we make our sale, somebody comes in and buys 20 bikes. Based on what we just did in our calculator, we know that all of those bikes cost us $100. That means our cost of goods sold is $2,000. And we've got 5 of them left, which are $100 a piece. Then we go out and we buy more bikes. So what's in our inventory right now is 5 bikes that each cost $100. We go and we say we've got $500 worth of inventory already. Everybody know how we got that number? We got $500 worth of bikes. We have 5 at 100. Now we go out and we buy 20 more bikes at $1,500 or $115 a piece. 20 times 115 is $2,300 worth of bikes plus the 500 that we still had in our inventory. Whoa, that's not right. 500 plus 2,300.
You're hitting the multiply button.
You're hitting multiply.
I wouldn't do that. I'm a very smart professor that doesn't make mistakes. It's probably a glitch on the computer, so I'll do it one more time. 500 plus 2,300, 2,800. Brianna, that's minus 100 points for calling me out in front of the class. I'm sorry. I don't mean that at all, dear. You guys are always welcome to call me out. We're just human beings.
I was about to say you gotta take points away from Kellen because he said something too.
I'll never take points away from Kellum. It'll never happen. Cobb, I'm going to take 5 points away for you. For just you proposing that, I'm taking 5 points out of yours.
Okay, yeah.
All right. So here's what's left in our inventory. $2,800 worth of bikes. There's 25 of them left, so we divide that by the 25 bikes we have in inventory. Now we've got a cost per bike left in the warehouse of $112. So to close out that problem, now we've got $112. So we're here on August 17th. We're looking at our warehouse. We've got 25 bikes. We've got them at $112 per unit, and we go and buy more. Now we buy 10 more bikes at $119. So we've got to get our calculator back out, and you've got to do 10 times 119, which will give us 1,190, plus what we already had in our inventory right here of 2,800. And what's left, we've got this inventory number here, $3,990 worth of bikes. There's 35 of them, so we divide by 35 to get 114. See where we got those numbers from? That's what's left in inventory. So it's not hard math, but you have to be consistent with it in order to figure out where it comes from. And then the last part of this problem, oh, I'm sorry, there's 2 more parts. Part number 4 of this problem is now we go and make a sale, right? We know what's in our inventory. So on August 28th, we have 35 bikes, $114 per bike, but we go and make a sale and we sell 23 bikes. We sell those bikes at $114 worth of cost because that's our weighted average. That means we've got 12 bikes left at a weighted average cost of $114 per bike. Go back through and make one more sale of bikes. And we sell 23 of them. We know that our cost per bike is $14. And here's our number. Everybody with me? You're not going to be able to do this just flawlessly without it. But remember that you're armed now with the videos on the assignment, the video of us doing this online that I'll post to your accounting announcements in Blackboard, and you have all of the Connect videos that you have to watch while you take notes. So between all of those things, you think we're going to be in okay shape? Not a bad place to start. All right. Now we'll have the part of accounting where I'm going to stop, and I'm not going to make you guys watch any more of this. I'll stop what I'm sharing, and I'm going to open up for questions about what we're going to do the rest of the semester, if you feel like we can survive it this way, and what I can do to improve on this to make sure you're more comfortable. I am toying around with the idea of if you are getting an A in this class and you're spending 3 to 4 hours a week doing the homework, I'm not going to make this mandatory for you. I always want to see you because I'm your professor and I love you guys, but if you're killing it on your own, I'm not going to make you come and listen to a lecture that you guys can listen to by yourselves. I'm not ready to pull the trigger on that quite yet. So for the next week, just come in so I can refine this and make it better. But eventually, especially as you get really busy toward the end of the semester, I know for Kennedy, it'd probably be nice for her to say, Mr. DeYoung, I'm getting an A. Don't make me babysit and watch a video at the same time. If I need you, I'll reach out to you individually. So that will come in the future. But I want to hone this in to the point where I don't want any student to feel like they don't have every opportunity to succeed. So I'm going to try this. If you say, nope, put me back in the classroom, give me somebody that can walk through these with me in the classroom, you're not going to hurt my feelings. I genuinely just want what's best for you. I don't want you to feel like you didn't have every chance to be successful. Oh, let's call on Noah, because he's my favorite. Noah, moving forward, what would you like to see in accounting?
I think where we're at right now is pretty great. I think you're doing a great job.
See, that's why I always give you bonus points.
Appreciate it.
Amaya, how about you? How can we make sure you're happy in this class and you got everything you need?
I am also pretty solid with how we're going right now. I don't think anything necessarily needs to change.
Beautiful. Logan, how about you? I don't think your audio works, but I'm going to just, by your nonverbals, I'm going to say that you're happy. All right. Johan, how about you?
I think everything's going pretty okay right now. And there's a few things I need to work on, but that's just me. I need to take time to focus on some things. But other than that, everything's going pretty good.
Good. It's time for us to start our best friendship on Marco Polo too, okay?
Yes,
You probably have one unanswered for me because I did a terrible job this week, but I know that you'll forgive me.
Yeah.
Callum.
Yeah, it's fine. Okay.
Callum, what do we need to do moving forward to make sure you're happy?
You know, I like where we're at right now. I agree with everybody pretty much. I like this video chat stuff. So.
All right.
I like
well, then speak now or forever hold your peace. But next week I'm going to plan on doing a video chat, making it even better and answering your questions. But I'm going to try it this way. But the minute you think you need more help, just call me. I'm happy to do a one-on-one session looking at your homework and going through it. So just don't, I know it's not ideal, but I also think we can pull this off to the point where you guys can do this in the comfort of your own home and have everything you need. All right, guys, you've got your assignment for week 6. I removed SmartBook from this. You can all thank Amani for that. That's her doing. She said, I don't want that anymore, and I love her, so I just said I'm not going to do SmartBook. So keep the grades up, but you don't have to power through SmartBook. Everybody should buy Amani a donut or a coffee or something to tell her thank you. And I will stay on the line until you're all off. So if you have individual questions, I will just hang out until you're ready. But if you're satisfied, you can log off knowing that I love you, okay?
Love you, boss.
All right, guys, take care.
You.
Sorry, my phone died.
Oh, no problem, Hill. You're good, man.
Peace.
All right. Tyler, how can I serve you well?
No, I'm good.
All right. Kyle?
Oh, no, one more thing. I know this is off topic. Can you email me my schedule for next semester?
Oh, did I not do that yet?
I never got it.
Some people's kids, man. I'll do it as soon as I'm done here, okay?
Good. I know you're good for it. Thanks.
All right, man.
It.
Cobb, how are you? All right. Mr. Hill, you got any questions for me?
No, I'm grasping the concepts pretty well. So
awesome. Did you like that wild assignment that I gave you?
The one the other day
with Nipsey Hussle.
Yeah, I like that assignment. I'm gonna get that done here pretty soon. So
I'm excited to see your viewpoint. And I think we can all learn from that. And cool ways to talk about culture with everybody. I think that this could be the start of something like that. So knock it out of the park for me, and I'll do you right, okay?
All right.
All right, man. Thank you. Joseph, so you're taking the ITBA track, right? Information technology. And there was a question about stats.